Founder FM. You're listening to Founder FM with your host, Graham Brown.
Hello and welcome to Founder FM. My name is Graham Brown. Today I want to welcome a friend all the way from the US, a serial startup entrepreneur, author, advisor and angel investor in the Bay Area. Welcome to the show, Tommaso Di Bartolo.
Thank you, Graham.
Fantastic. It's good to have you here. So let's talk about what you do. You've got so many projects to your name now, Tommaso. I'm just going to do this for the listeners. List out some of your current projects. You're a mentor at the Alchemist Accelerator. You're a partner at Awesome.io. You're an expert in residence at Bootstrapped Labs, a mentor at Mind the Bridge Foundation, a mentor at Draper University, advisor to a number of startups, plus a founder, plus an author. Wow. Is that typical of life in Silicon Valley?
Yeah, that's a good question. Definitely, it's very common here in Silicon Valley. Giving back after you have learned a couple of things in tech business is definitely a mentality here, and that's exactly what my goal is in really participating in exciting environments where you find a lot of really great innovators and great founders, great innovations, so that you can help them out. And at least, what I'm always used to say, Graham, is if I can share couple of lessons learned that I had, and people based on my learnings avoid things that I could have done differently, right? That's already a great achievement. And yes, it's pretty common here.
Excellent. Well, we'll talk about some of those lessons during this conversation. I want to know a little bit about that environment that you talk about. For a lot of people who haven't experienced Silicon Valley, what exactly is it like? I mean, can you share with us just sort of a typical day? Because everybody's now talking about startups, right? There's startup events in every city in the world, but it's not kind of Silicon Valley. Silicon Valley is very unique, isn't it? What is it about Silicon Valley that attracted you to it in the first place? And just share with us a little bit about the magic of Silicon Valley.
Sure. I think before I share you about the Silicon Valley, it's interesting and important to understand a bit also, how I got and why I got to Silicon Valley, right? Because it's responding to the question, what is it that it's magic, right? What is it about this attraction here? So I was born and raised in South Italy, which is in Sicily, to be very very exactly. And you don't have really very much about tech, almost none down there. Then I made my path to Germany, where I graduated, and I lived almost 20 years, 17 years to be exactly. Over the time of 11 years, I had 2 startups, and on both startups to exit. Then I had a pit stop in London before making the move here to Silicon Valley. And the simple, reason why moving to Silicon Valley, if you are not in Silicon Valley, what I'm emphasizing with not in Silicon Valley, it means even if you are in the US and not in Silicon Valley, you always hear so much which is going on here in Silicon Valley in terms of this innovation, this environment. And of course, if you are in the startup space, you hear about those huge valuations, multi-billion valuation within this short period of time, backed by A-brand investors, right? And if you are in a tech space, you listen to that, and you're attracted to that, right? And you always have this question mark: what if I am going to be there? What if I go there? How would my future look like? How could I impact basically the environment, right? So and this describes a bit really this pull that Silicon Valley has. It's a unique place in terms of the great universities that are here, that create the very smart brains, out of the box thinking, next gen entrepreneurs that are all about innovating and bringing innovative stuff on the market that nobody has seen, and that everybody else would say you are crazy. And if people say you are crazy, yes, you are on the right path because it doesn't exist. And investors saying you are crazy means, wow, there is a potential behind that. And if there is a potential behind that, then you have initial traction. Then you get the dollars that elsewhere you would have never gotten. And even if you fail in Silicon Valley, it's the only place where you can make more money in failing than in other places if you sell your company. So I'm talking about acqui-hires, right? If you have a team of 3, 4, 5 engineers and you build something and eventually you don't get traction enough, but Google, Facebook, one of the big acquirers is interested in having basically you part of their team, they pay you big dollars to be part of it. And if you basically add all those small points together, and on a daily basis, this is like for an entrepreneur, it's you are rewarded on a daily basis by being just part of this entire ecosystem. This makes you basically really, for people not in Silicon Valley, think very strong. And should I take the decision? Should I make the step? Should I go there? And then you basically jump into Silicon Valley.
So at what point did you decide that, right, we're going to Silicon Valley? Because you had a family, right? So you're going to move everybody across to the US. When did that happen in your journey?
It's an amazing, important question what you're asking, because I differentiate between two kind of people that can make it to Silicon Valley. One is, it's the student that has no family and that has, this passion or this drive, especially if you are an engineer, right? And you have no family. You should definitely come here because you make your way through. It's a place where, again, especially engineers that are passionate about creating stuff, breaking stuff, making stuff, they really emerge into Silicon Valley the fastest, right? Myself, I'm a business / a product guy. I had already 11 years of entrepreneurship with 2 exits. So basically Europe to me was becoming small. And when I started to do my third startup, which was a cloud service brokerage platform, I basically start for the very first time in my life, because in Europe it was not common at all to raise money. In fact, my first 2 companies, I completely bootstrapped and grew from scratch without any bank investment or without any family and friends, really out of the revenue, organically grow the company. But with my third company, I wanted to do something global. I wanted to impact global. This was my goal, because this was my curiosity back then after 11 years. Okay, that's exactly what I want as an entrepreneur. I was at a stage, this is what I wanted, right? And when I met basically the first investors in Europe, I saw that they're limiting my path and limiting my vision and what I wanted to do, by being not really very open on what I was about to launch and release. So, and that's where I basically made the decision. I want to move to Silicon Valley. Now, I was saying at the beginning of this explication that we have 2 types of people that I see coming to Silicon Valley. One is the engineer, and the other one is somebody who can afford coming to Silicon Valley. Because I have many friends calling me from around the globe and say, hey, Tommaso, what do you think? Should I come to Silicon Valley? I often answer, well, coming to Silicon Valley is not a question if you can come to Silicon Valley. It's really, can you afford coming to Silicon Valley? Especially if you have family and you want to integrate with family. It's very expensive living here. And it's very, it takes a time before you basically start being integrated into this ecosystem, right? So my tipping point of coming here was after 2 exits, after, me deciding on getting the next global or the next step for me as an entrepreneur and for my companies, then, I want to make the step. And then I basically, decided with my wife, my 2 kids, and my new business. I made the visa, which is a chapter on its own, which is also something that people that have been born and raised here in Silicon Valley don't have this challenge. But coming here, you have to do this big effort of a visa, which is always challenging, and not to under consider. But eventually, a good entrepreneur, you solve all those tasks, and then you jump into the Silicon Valley pool.
Right. So let's sort of take this back a bit, because I think what's interesting to share with the listeners is that in 2002, you had a cloud computing startup, right?
Yeah.
That's 2002. We're talking 14 years ago. You were doing cloud computing. Was that an SAS model, or how does that work? So tell us a little bit about that startup.
Sure. I started in telecommunication in 96, 97 in a telecommunication company, and then I moved to a hosting provider. So the reason why I'm mentioning that is because, if you combine telecommunications, so telco plus hosting, you are already aware of a certain business type, which is a continuous monthly recurring revenue type. And this was my fundament of technology, of, understanding innovation and bringing and handling basically customer relationship and building products for customers. So once I started, basically, when I in 2002 started with my first company, what I did is really, bringing a software or making a software available in a hosting provider, which back then was called either hosted software or application service at ASP, application service provider. After application service provider, it became the wording managed service provider, MSP, right? And after the MSP, we shifted into this wording of SaaS, which is software as a service, which then became eventually cloud computing. But at the end of the day, yes, in 2002, we had a hosted software with a multi-tier, multi-tenant architecture, focused in the space of email and web security. And again, it wasn't, the target audience that we were serving in Europe. They had just software appliances they could select from, and we were coming up with this innovative approach and says, well, if you want to basically, back then the value proposition was reducing the spam wave and the virus wave before it hits your company a gateway. You should go with a cloud provider like us, right? So they hadn't really much of a choice. They had either software and appliances, which was part of the internal gateway of the client, or this external service, right? And then we focused really on building, and this is key and very important for every entrepreneur. Once you have your MVP, dear entrepreneurs, you have to put the intellectual property into your go-to-market. In other words, if you are innovative and smart in building something that the market wants, and you have initial traction, don't underestimate the effort and the amount of time that you have put into your go-to-market strategy. And this is one of the main chapters that I'm describing in my book, which is called Creative Traction Methodology. How can an innovator create a mindset that is continuously focused on bringing product to market? Because today, globally, 9 out of 10 startups fail, not because, Graham, of the innovative part, or because of failing of putting the team together, because of failing of raising money. But they fail because of go-to-market strategy. They overinvest too much time in just producing the best product, and then they underestimate in putting creativity and uniqueness and differentiator into their go-to-market strategy.
Right. So this is the problem that a lot of engineers have, right? Because they're engineers by design. They like to focus on the product. But your background is what? What did you study at university?
I studied marketing.
Right. Okay. So did you come with a marketing approach to your cloud computing startup?
I always came with a product-centric marketing /BD approach. So product-centric means I have, if I would have to describe myself, I have the ability after almost 2 decades of being an entrepreneur of enchanting others about what I'm doing. And usually I position products that solve a problem. So I did a marketing. Yes, I approach things from a marketing perspective because I think a lot about who is my target audience, who is my buyer persona, what kind of problems can I solve. But I think also beyond just needs that I can fulfill and say what kind of an experience can I create around my product so that my target my buyer persona, my segment, my target audience gets basically something that goes beyond just fulfilling benefits, right? So yeah.
All right. So obviously somebody liked that enough in your first business to buy it, right? So you sold your first business. I want to know what it felt like when you had your first exit. Can you tell us a little bit about that feeling, the first couple of days after you realized that everything was done?
So, I mean, first of all, you never sell a company. Companies are acquired. That's what you say here in Silicon Valley. So basically, you have really acquirer, and the acquirer are looking for something to complement their portfolio. Either they want to get into a new market, or the new specific talents that they want to acquire. They want to get they want to add a specific feature to their portfolio. And the way that it starts, it's, in my first, I can very much remember how the first conversation went with my first acquirer. We were having a meeting, which was just a business development meeting, right? With a company that was similar to ours, but not in a competition, because way bigger than ours. And we were, starting out and saying, okay, we are thinking of starting a strategic partnership with you. This is what we do. We met a couple of times, and once we started opening up more and more, they saw that we don't only have IP in our product, but they saw that we have IP in our pool of talents that we have in house. We have amazing IP in the way that we distributed the product that they were not capable of, and they wanted to enter badly this market. Back then it was 80% was coming from Central Europe. So we had those 3-4 components that they wanted, right? So a side note here for entrepreneurs to say, how is this path towards an exit? Invert the thought and say, okay, where can I fit in with my product? And break down why should they acquire you. And it's never just about one, it's never just about the product. It's always a series of reasons why, right? And then, in those conversations, we had a first sentence that was basically released like, hey, how about we acquire you? And this was the first time that actually popped to my mind to sell the company. And move on, or to sell the company and do other things, right? And out of curiosity, I'm was very much driven by curiosity. So okay, let's what does it mean, right? And then we went into this process of due diligence, and I also have a speech on that. And if you go on SlideShare, you'll find a couple of notes on the journey to the exit. And then you do basically, you set up the entire documentation, the entire IP documentation. They start digging into it. Negotiation goes, and then you have the long negotiation of the agreement. You have handcuffs into the agreement. What means when you exit? How long do you have to stick with the company? How does the integration go? And then you move on. Actually, to answer your question in a short form, when I was exiting my first company, I already had my second company for 6 months up and running. That's the reason why I made it part of the agreement that I just did the integration and I moved on. So yeah, and this was always my case. I always said in my first and my second company, I always had either my second company already built up, or my third one and the second.
So you obviously enjoyed it enough that you started the second company because you wanted to be in that space, and you grew this business. Is this the business the cloud brokerage that you grew, which
Yes.
eventually became, by 2010, the biggest cloud service brokerage in the world?
Yes, that's right. Mm-hmm.
Right. So taking on this challenge of building this second company, were you now building this with the mindset of having it acquired? Was that now that you've already done this with the first company, now building the second company, were you doing it in such a way that, right, this is how it can be best acquired?
Let me answer that way. Definitely more than in the first one, Graham, right? But the sense of building companies that need to achieve a certain ripeness and then being acquired, I really got this mentality 5 years ago when I came here to Silicon Valley. Because in many cases outside Silicon Valley, if you have a running company, it's a nice achievement that you have, and you don't really think primarily of exiting the company. At least not back then when I was living outside Silicon Valley, right? So yes, my second company was more built to be exited, which was the case, but not as focused as I'm doing things today.
Right. So was it easier at all building and exiting the second business than the first business now that you had experience?
I had definitely more the trigger of when do you want to exit, right? So it wasn't, while in the first one it was more a pull exit, right? On the second one it was more, okay, now it's time. I understood my gut feeling and my trigger in terms of timing and exit way better than in the first one. Yeah.
Right. So you had a better understanding of when was the best point to exit this business, right? Because you had experience from the first one. And with 2 exits behind you, is that the point where you decided to come to Silicon Valley?
Yes, that's basically. Actually, I mean, yes, in terms of this was the fundament, right? Coming to Silicon Valley was it's also, as I mentioned before, financial impact that you have, and especially if you want to build another product. But let's say my Silicon Valley decision was taking when I was building my third product, which basically I took then over here from Europe over here to Silicon Valley. Yeah.
Right. So answer this question for me, please, Tommaso. I'm curious to know, because some people build businesses and bootstrap them like you did with your first business and never exit, right? Mm-hmm. And some people just build businesses to exit them. Is there a sort of a case for both? Do you sort of favor one or the other? Do you think that some favor certain types of entrepreneurs, or do you think everybody should try some type of business, like try to exit a business? Maybe some bootstrappers miss an opportunity by not exiting and so on, because you've seen quite a few businesses now as an advisor and having bootstrapped and exited a business. What do you think?
I think the question should be in a direction. I mean, having the luxury of deciding exiting a company is an amazing, nice challenge to have, right? Right. You sit there and say, well, it's working, because you never sell a company, you get acquired. It means when you get acquired, it's more, well, okay, you want to acquire me, but everything is working. I don't want to sell. Right, so that's basically the strategy, right? You're not there and say, "Hey, can you please acquire me?" It's a tactic, it's a strategy, right? So having the situation means, well, I'm in a nice position, and then it's really a mentality thing. What you want to do. Do you want to grow this business and move, and make this, for the next whatever amount of years your daily business, or do you wanna continuously grow also as an entrepreneur? I mean, just to give you an example, over my last almost 2 decades in being an entrepreneur, I've been, I started in telco, then I moved on to cloud computing. For the last 3 years, I was in the space of mobile, and now here in Silicon Valley over the last month, we are in the space, or we have clients in our portfolio in the space of augmented reality. Right, and you see this huge path of growth, which to me, as Tommaso, as an entrepreneur, is amazing, because it's exciting. I've been, I could have been stuck in telco. So exit, yes or no? Well, if I wouldn't have exit telco, then I would have become maybe a very focused telco guy or cloud computing guy, right? But this way, I'm learning way more, connecting way more, and getting way more wisdom and knowledge. So I think the question here that I ask and I advise also entrepreneurs is, okay, if you're a first-time entrepreneur, don't think of the exit, because this is not the way that you start, right? The way that you should start out the company is really, what are you? Are you a business guy or are you an engineer? If you are an engineer, which is basically more increasing the probability of you bringing at least a prototype or MVP to market, right? You start thinking of, okay, how is my cash flow situation going to be? Because if you want or not, this is going to impact your reality, right? And the reason why I'm emphasizing that is because I have started companies. I mean, actually, my first 2 companies I started them out as a service provider, and then I started understanding more and more my target audience and building IP, intellectual property technology, around the service provider business, which did what? Which gave me a cash flow situation, which gave me a structure of an early company growing into technology, rather than Again, most of the companies in technology just focus on let's build a prototype, let's build an MVP. By the time that you can define that you're satisfied with an MVP, you try to pitch investors. The investors all say come back when you have traction. You eventually have friction if you don't raise money. And then most of the companies don't raise money. So, again, if this is your first company, your first time entrepreneurship, in order to increase the probability of you making it, start out as a service provider, understand your target audience, offer services to your target audience without IP, build IP around the target audience, because so you minimize the risk of what is going to be my MVP. You have a better customer discovery phase, and start making money. So you don't have this pressure of can I survive or can I not survive, right? And this is basically for a first-time entrepreneur. Now, if you're a serial entrepreneur, which to me means very clear, if you have money on the bank, right, then of course you can, I don't have to explain serial entrepreneurs how you make business because you know it, you're a serial entrepreneur, right? So you start doing your product and then eventually you start thinking of monetizing or raising funds.
Right. So summarize, if you're a first-time entrepreneur, your focus should be on cash flow, right? Understanding the customer, getting the cash in, because that gives you a lot more freedom to move, a lot more negotiation leverage for the future as well. But if you're a serial entrepreneur, maybe you've got a bit more freedom in terms of whether or not you need to get cash in right away, right? Because you've got money in the bank, you've got funds, you can maybe take a bit longer, take a bit more risk with the customer development and product development and so on.
From a standpoint of having a smoother process, cash flow is something that is important, even though when you come to Silicon Valley, say, what is Tommaso talking about? You have to build a product, and even if you don't monetize this the first month because you increase your company value. Well, if you're a Mark Zuckerberg or if you want to be the next Snapchat, which to me is, you don't start out by thinking you are the best in the world, right? Saying, okay, what if I'm just the average person and I just make my thing? Then yes, you should consider early on to get to a form of cash flow, to have a customer discovery phase, which means understanding the needs of your customer on an ongoing basis by making your customer pay you a consulting work or whatsoever, and then building intellectual property around that. This would basically reduce the risk of you building things that the customer doesn't want. It will increase the probability of you lasting longer with your product. It will increase the probability of you not having friction with your core team members, because after a while, if you don't raise money, you have friction with your core team members. So yes, it is important.
Tell us a little bit about your ideas for understanding what the customer wants, because I think this is a really interesting area for an industry which focuses heavily on product, right? Sometimes people just have a gut instinct. Yeah, I want to do this because I'm really passionate about this, right? I want to make this app because I believe it's going to change the world. But you can spend months, maybe years developing that app and maybe nobody wants it. How do you know what the customer wants when you're busy building this app? You're busy trying to run a business, do all the things associated with that. What kind of advice do you give to startups these days about going out and understanding the customer?
But you basically break it down in three phases. Phase number one is start before you start. People come up with, they aim an MVP. And just the definition of an MVP could be another chapter on its own. Because what is an MVP? If you compare it to competitors, you want to make it as competitive as possible. It's really how do you define an MVP? And usually MVP is almost a finished product, which takes you again a long time before you launch. That's the reason why I say before you do what you are doing, start before you start, which means before you are launching something, you know in which area, in which segment, in which target audience you are serving. So start creating a buzz around it. What does it mean? Start building up a blog, start reaching out to people, start creating an inbound strategy, a lead gen inbound strategy. Why? Because this is key to see if the message and the value proposition, the usability experience of your splash page, if this converts, as spent just $150, $200 on trying to reach your target audience. Why? Because you understand if the target audience is willing at all to make the call to action of giving you the email address, right? So don't wait that the MVP is there. So the wrongest thing that you can do is going on the market and claiming, well, we have just a silent release. Nobody wants, Graham, a silent release. If you ask entrepreneurs, would you prefer a silent release or something that the entire world would know? Everybody goes for the second one, right? But why are you not executing in this direction? Well, it's simple, because you concentrate only in direction minimum viable product. Well, you should concentrate and put the efforts 50% on developing a prototype, which is something smaller that validates your first initial assumptions that you have in your segment, and collecting leads on that, right? So this is basically the step number one. Step number two is really understanding who is my target audience, and start building user stories. User story is really describing a very precisely situation in which the user is in, where he starts thinking of your product. For instance, I'm John. John is 14 years old or 19 years old or whatever years old. He is leaving high school at 4 p.m. in the afternoon. He enters the tube, or the train. And the reason why it's important, because you can follow every step that your target audience is doing on this specific day up to the moment that the brain triggers the situation of saying, and because he has this challenge, he opens up, as an example, the app that does this and that, right? So you start understanding what you're doing on a very concrete method, right? And this is something that most of the startups don't do. They come up with, hey, what are you doing? I have a platform that does an algorithm that has a multi-tier, multi-tenant. It's BS. Nobody understands that. So go back to the simple thing, storytelling. This is the situation of John. Imagine if John would have in this situation, this product. This is where we come in place, right? And then you start basically really building a framework where you start addressing this target audience and really see if the product that you are building and developing, if this matches the person's need.
Right, so that was very useful. Let's quick review of that. 3 steps there: prototype, user stories, then framework, right?
Yeah.
And I think the important part, the first part, prototype, is something I see a lot of entrepreneurs, whether they're sort of in the tech startup scene or outside of the tech startup scene. It's something I think it's one of the biggest mistakes people make, is they spend so long developing a product that nobody's ever seen, right? Whereas they could do something so much simpler, just something quick and easy, and see if somebody would be interested in giving an email address or clicking a button or whatever it is, some kind of action, just to see what kind of response there is to that prototype, right? But there seems that kind of resistance that entrepreneurs want to build something much bigger first before the world sees it, right?
Well, the way that absolutely right. The way that I describe it, once you are in the business of being an entrepreneur, yes, you have to be passionate. Absolutely, that's what drives you, and that's the reason why I also say, the purpose of why you do what you do is key. Okay, but most of the people just focus, I want to get it done. I want to get it done. And then the definition of I want to get it done is I want actually to get it really good done, right? Because the market competition is very, and they forget that between I get it done and between does my customer want it, right? I mean, there are books on the market that describe very well how you can build products some customer want, like lean strategies, like 4 Steps to Epiphany. I love those books, right? But that's the reason what motivated me to write the book Creative Traction, which you find on creativetraction.io, is really how can we create a mindset for innovators that understand that step number 1 is already reaching out to your target audience. Graham, if you cannot create a buzz around the segment and the vertical, the target audience, the buyer persona that you are going to serve early on, then you are going to have the same challenges afterwards. Do you think that it's going to change if you have the product online? This mentality of I build something and customer will come is the most wrong thing that basically exists. So step number one, start before you start.
All right, so let's just talk about that, because this is a really interesting point, Tommaso. Let's say, for example, I have an app.
Right.
Let's say, for whatever reason, it's a health app, right? Because I'm passionate about health and fitness, right? And I want to, I've got some money. I want to spend 4 or 5 months developing this. I've got a team in India, etc., all that kind of thing, right? What we're saying here is, hang on a minute, just back up a little bit here. What would be the step one that you could take in terms of the prototype? What's something easy that you would advise an entrepreneur to consider?
So first of all, you have to be very clear about what's the unique selling proposition. What's the USP? Why are you building another medical app, right? If you're clear about that, you're clear about who is the target audience that benefits from what you just described as a USP, right? So far, so good, right? So you have this unique selling proposition, right? Once you have the unique selling proposition, without having a line of code, you basically do a splash page and you position the USPs and you put a call to action on the splash page. Be the first to get this app that does ABC. And then you spend $200 on Twitter, AdWords, or Facebook just to test if the audience that you think is going to be the audience reacts at all to what you're saying, right? Because there are a lot of assumptions that we have once we have this idea of building something. One is, this app is going to help those people. Okay, this is just an assumption. Is that true? How can I reach out to them, right? How can I build a list of them? So in other words, you have to build and position yourself as a founder, as the thought leader in whatever you're doing. How? By getting credibility. So the next step would be create a blog and start blogging on a weekly basis about what you're doing. Why? Because content drives basically credibility in what you're doing, right? Hey, this is what we are doing. Sign up today, and this is backed by my competence. You see here the blog. Then a third thing that I advise is gamify this entire approach, right? So understand really what is the reason why people sign up. People don't sign up just because you say it is going to be good for them, because everybody does that, right? How can you trigger other decision-taking moments for your target audience? And usually all the humans being are always happy of being just part of an exclusive community. I'll give you another example. Create a closed community where they can talk on a weekly basis with the founder of this product. So you make them, your target audience, part of the product early on. So you give them basically access to something where they feel VIPs. And you make your target audience part of your product. Don't think that your target audience is just, your go-to approach, your final endpoint. No, make your target audience part of your product. Communicate with them. Give them exclusivity to something. Let them feel special. Gamify this approach. Give them points for those who have basically cooperated. And this goes back to what I was saying before. Start before you start and put intellectual property into your go-to-market. People think a lot about how can I be different with my product, and they underestimate totally one point: how can I be different with my product, and how can I be different in my go-to-market, right? Because if you are launching innovation, your go-to-market must be equally innovative as your product. And for those who haven't read the book From Zero to One from Peter Thiel, I love this book. Really, you should really read it. This is really recommend this, and he explains it also very well.
Very interesting. You need to be equally innovative with your go-to-market strategy, right?
Absolutely.
That, I think, alone is great advice, because so many entrepreneurs don't even think about that. Go-to-market strategy for many entrepreneurs is simply a process, right? It's simply follow the steps, right? But that's not innovation, right?
Well, most of the entrepreneurs, I mean, let me even formulate it differently. Most of the companies on the market, if they think of go-to-market, they think of the 90 to 22 channels that you have available, and then start playing just around with the channels. Okay, we go on the traditional AdWords, we don't into traditional Facebook. Now, you can only win this battle of channel A/B testing if you have deep pockets. Why? Because it is obvious that everybody is using those channels. And if everybody is using those channels are cluttered. Which means what? That if you don't have a high budgets in order to achieve a high click-through rate, cost per click, for instance, right? You cannot compete with the big ones. So a startup usually has always the situation which has no budget but a huge goal. Which means, okay, if I have no budget, I have to come up with something creative. And creative means not going into those channels what other people are doing. For instance, my latest journey is called awesome.io, AWESM.io. We are a next generation investor, and the thing that differentiates us is we don't give just dumb money to founders and team members and startups. No, what we say is we are hands-on team members of your team with one goal: to get you traction. It means that basically we start on the traction side with the team members in order to do what? To validate all the assumptions that they have and to help them with problem number one, which is, if I don't get traction, I will die, / if I get traction, I will get money, right? And that's exactly where we jump in and say, hey, we help you on validating all the assumptions that you have hands-on by putting basically a creative go-to-market strategy and rolling out a creative go-to-market strategy while you can focus on the engineering side, right? And that's exactly what the market needs, as I was mentioning before.
That sounds like, exactly, there should be more of that, right? Because that is the biggest problem right now in the startup scene. I mean, money is available. There's enough money out there. There's enough funding. There's enough angel investing, VC funds available to startups. The biggest challenge is the next part, which is getting traction, right? And that seems to be a huge gap in not just Silicon Valley, but all over the world, right? Because what do you do once you start building this? What do you do once you exit the accelerator program, right?
Right.
A lot of people just go off into the wilderness and, nothing ever happens to them. So I think taking them to the next stage, do you think there's going to be more of that kind of program like what you're doing with awesome.io? Will there be more of these people doing this kind of thing?
I mean, the USP that we have is less about really the idea, because you say, well, this sounds actually very logic that awesome.io is offering this hands-on approach with startups. The reason why many investors are not doing that is because many investors have never been entrepreneurs. They have, Stanford MBA guys that are great in financials, but they have never been inside emotionally in a startup from the beginning. I'm not saying about being number 15 in a startup, because the emotions and the pressure that you have, the feelings that you have in being number 15 in a startup is different if you started on a white paper from scratch, right? At the beginning, you are fearful, you don't know where it goes, you don't know what you're doing, right? You have a lot of you are anxious, you have uncertainty, but you have to run at the same time. So to respond to your question, only people that have a certain amount of operational experience within startup from scratch are that bold that can say, hey, you know what? I've been there. I've done that. I started from scratch. I know what you're feeling. I know that I don't have budget. I know that you have high goals, but I like what you're doing and I like you. And that's the reason why I jump into it with you. I help you on that. And then basically we divide the cake. Right?
Excellent. Tommaso, it's been great talking to you today. There's so much information there. Where do we find out more about you and your journey?
We're definitely on my LinkedIn profile / Tommaso Di Bartolo, or we follow on my Twitter, which is at Todiba. It's TODIBA. We have my book is online coming up. You can sign up on the pre-release, which is called creativetraction.io, or I'm sharing my lessons learned on my blog, which is called What It Takes, and the URL is whatittake.es. So basically, write out the word what it takes and put the dot before the es, and that's basically where you find out, and you can follow me. Yeah.
We'll put all that in the show notes. It's been fantastic having you with us today. It's been an inspiration, some great advice for startups. I'm making notes as well. I've enjoyed listening to your advice and words of wisdom. And yeah, we're looking forward to having you on in the future, especially seeing the journey with awesome.io and your new ventures. I think it'd be good to see how that's going in 6 months, 12 months down the line.
Yeah, I'm excited, Graham. Thank you for having me. It was a pleasure.
Thank you so much.
Thank you. Bye-bye.
Founder FM, voice of the entrepreneur. Find out more at www.founderfm.com.